that looking forward for the next 10 years, the US dollar loses 75% of its purchasing power in real terms, which means I suspect that over 10 years, the gold price, the nominal gold price, the US dollar quoted gold price, will increase to match the decline in purchasing power of the dollar. Does that mean that I think gold will go up threefold in 10 years? Perhaps. Yeah.
Well, if you own gold and silver, it's good.
Yeah.
But if you don't, you're in big trouble. And they always say bonds are safe. There's nothing safe. And so if there's this crash of the S&P in the bond market, my generation are going to join the homeless. The Fed's the problem. The Fed's Marxist. It's a central bank, if you know what I mean. And so I've never been a fan of the Fed. America is the biggest debtor nation in world history. It's the end of the American empire. Every time they printed too much money, empire's gone down.
Gold prices have recently retreated from their historic highs, sparking both anxiety and optimism among investors. After a strong run that pushed the metal near record territory, the current pullback has opened the door for renewed buying interest. Analysts suggest that central bank demand and geopolitical uncertainty continue to provide long-term support for gold, while silver's recent dip below the $46 mark could represent a buying window for those betting on industrial recovery and inflation resilience. In a recent discussion, veteran investor rickrule, former president and CEO of Sprott U.S. Holdings, offered his insights into the current gold cycle. Known for his decades-long expertise in resource and precious metals investing, Rule explained that short-term corrections like this one are typical in long bull markets. He emphasized that patient investors who understand the cyclical nature of commodities often view pullbacks not as warnings, but as opportunities. Rule also noted that junior mining stocks, while volatile, can offer exceptional leverage to future moves in the gold price. As global markets navigate inflation, interest rate adjustments, and investor sentiment shifts, both gold and silver remain focal points for wealth preservation. If you enjoyed this update and want to stay informed about the latest in precious metals, don't forget to like, share, and subscribe for more expert insights.
Of course, we've seen gold on its historic run. Right now, we're in a pullback, and I'm seeing many people who are looking at this as an opportunity to buy. Some people who are concerned about maybe this is it for gold. So I thought if you could contextualize where we're at in the gold cycle right now.
First of all, in the very near term, I sold 25% of my junior gold stocks. I did it because by selling 25%, I was able to get the other 75% for free. In other words, I sold off 25% of my upside to eliminate 100% of my downside. That's for the speculative part of my portfolio. The other part of me, Charlotte, has been saving in gold, maintaining liquidity in dollars, but saving in gold since the year 2000. I haven't sold an ounce of physical gold. And in the 25% of my junior gold stocks that I sold, half that money went into gold and 3 senior gold producers. In other words, I bought beta and I sold alpha. I believe, as you and I have discussed before, that looking forward for the next 10 years, the US dollar loses 75% of its purchasing power in real terms, which means I suspect that over 10 years, the gold price, the nominal gold price, the US dollar quoted gold price, will increase to match the decline in purchasing power of the dollar. Does that mean that I think gold will go up threefold in 10 years? Perhaps. Nobody's going to get this right. The whole game is to get close. So if you aren't in gold, you need to begin systematically saving in gold. You absolutely have to. You also have to understand the inherent volatility in the gold price. It will not be stair steps to heaven. It will decline 25%, 30%, sometimes 50% in a bull market. You have to be prepared for that. So it's a nuanced question. We were in a period 5 weeks ago where there were no asks. There were all bids. And I've learned in the market to do what's easy. If there's no bids, be a bid. If there's no asks, be an ask. And the sector was white hot. There were so many junior financings. And when a company's financing, they're telling you that your cash is worth more than their stock. Well, they should know what their stock is worth. Since they were selling, I decided I would sell some too. But what was most important to me was personal. I've been a heavy investor in the sector since 2020. And I was at a period of time where I could, by selling a quarter of my position, recoup all of my capital and pay the capital gains tax and have the rest for free. I can be very patient, Charlotte, with that remaining 75%. I believe gold will do well in the next 10 years. And I think the market will go to alpha, which is to say, I think the market will get more speculative. For my own portfolio purposes, I think I wanted to own de-risked beta as opposed to alpha. So I bought gold, Franco-Nevada, Wheaton Precious, and Agnico Eagle. I brought the highest quality companies I could, deliberately going against the market trend, because that's who I am, but also personalizing it.
What is the expected impact on gold and gold miners in the short term as well as in the longer term? And I think this is something we've gone over before.
1987 and 2008 answers that question. In a liquidity crisis, in a panic, everything gets sold because the investor doesn't make the sell decision. The margin clerk does. And the margin clerk doesn't care about your preference. So in a real sell-off, everything gets sold. What happens is that the policy response to those liquidity crises is always good for gold. It's always money printing. It's always artificially low interest rate. So gold sells off with everything else, but it comes back much more quickly. I believe that worldwide, the energy industry, the oil industry specifically, is underinvesting in sustaining capital by about $2 billion a day, which means that the production levels that we enjoy today are not going to last, which means the oil price, at least the nominal oil price, goes up. I believe specifically that what Exxon is worth, not what it's selling for, what it's worth will double in the 3-year time frame. So I'm buying a double at a 60% discount, or 40% discount to net present value for the finest company in the world. Taking a little more risk, a little. I own Chevron because they're a more efficient refiner and marketer. I own a little bit of Occidental because of proved undeveloped locations, but they got a lousy balance sheet, but I still own it. In the U.S. natural gas business, I own Devon and I own Equitable.
As global markets remain uncertain and inflation continues to bite, gold and silver have once again taken center stage as safe haven assets. Many investors are turning to precious metals to protect their wealth amid fears of a market correction and growing warnings from major figures like Warren Buffett about an impending downturn. The widening gap between the rich and the poor, coupled with instability in the S&P, has made hard assets an attractive hedge. Robert Kiyosaki, best known as the author of Rich Dad, Poor Dad, reinforced this message in a recent discussion, stating that those who fail to own gold and silver could face serious financial trouble. Kiyosaki has long advocated for financial education and real assets over paper wealth, emphasizing that economic shifts favor those prepared for volatility. Let's go back to the interview.
Well, if you own gold and silver, it's good.
Yeah.
But if you don't, you're in bad trouble. You're in big trouble. You're in very big trouble. My concern is the gap between rich and poor is going like this. And even Buffett is warning, about what's going to happen. If this S&P goes down, my generation, the old guys, we're toast. And my generation, the boomers, were the first one with a defined contribution pension plan, today called a 401k. And so my generation was the first one put into stocks. And they always say bonds are safe. There's nothing safe. And so if there's this crash of the S&P in the bond market, my generation are going to join the homeless. That's my concern. So that's why I wrote in Rich Dad, Poor Dad, savers are losers. So I save gold and silver, now Bitcoin and Ethereum. I don't like fake money. The Fed's a problem. The Fed's Marxist. It's a central bank, if you know what I mean. And so I've never been a fan of the Fed. I wrote Rich Dad, Poor Dad because we had no financial education in our schools. So at my generation, homelessness is spreading all across the world. It's because our money's not sound. So that's why, forget the book by Lawrence Lepard.
Oh yeah, The Big Print.
The Big Print. Everybody should read that book because that's what's coming.
Yeah.
And so I'm very concerned. Who was it? Alexander Hamilton. If a federal bank takes over, homelessness will spread. We were warned of all this, but our schools don't teach this stuff. So I'm hardcore. I've been a silver fanatic since 1965. I still have those silver coins, and I just love silver. So I stopped by to say, well, when's it going to 60? When's it going? I'm a fanatic. I said the biggest problem is the Fed. our debt. We're the biggest debtor nation in history. And what's going to happen is they're going to have to keep printing to survive. That's going to cause hyperinflation, which brought down the Weimar Republic and all those guys.
Yeah.
So you better have something real. And I think gold and silver are money. It's very simple.
Awesome.
You can't change the Fed. America is the biggest debtor nation in world history. I'm afraid to say, and I flew for the U.S. Marine Corps, so I'm not patriot, but it's the end of the American empire. Every time they printed too much money, empire's gone down. The Romans tried it, Germans tried it, Chinese tried it. We're doing it ourselves. Because in 71, as we all know, August 15, Nixon took the dollar off the gold standard, and we started printing money. So we're finished. I hate to say this. So that's why on Rich Dad Poor Dad I put savers were losers. Because you're saving the U.S. dollar, you're saving toilet paper. You know, I'm a rich man today. I mean, I just bought my latest house with gold. And I own Bitcoin. And I own Ethereum. You know, I like things I can control. I just don't trust the dollar, and I don't trust my government. I don't trust the Fed. And that's why I'm a gold guy. Gold guys are the biggest pessimists in the world.
In today's uncertain economic landscape, one message resonates strongly from both experts. Preparation and awareness are key. Whether it's Rick Rule's insight into the natural pullbacks within the gold market or Robert Kiyosaki's urgent warning about the dangers of ignoring hard assets, both voices highlight the same truth. The financial world is shifting. Gold and silver continue to play a vital role in preserving value when paper currencies and markets face pressure. These metals are not just investments. They are strategic defenses against volatility, inflation, and widening wealth divides. As global economies navigate instability, investors are reminded that knowledge is power and timing is everything. Those who stay informed, think long-term, and act wisely will likely emerge stronger. Whether you follow the cycles of gold or heed the call to own silver, the key lies in taking action before opportunity passes. If you found these insights valuable, don't forget to like, share, and subscribe for more discussions on precious metals, wealth strategy, and financial freedom.